What's up everyone, it's Karthik with MoneyVest. So in this video, we are going to be talking about one asset class which I have been buying in the past and I believe has a ton of potential long term. It actually just hit a new all-time high, brand new all-time high. We started buying this last year in 2023, so super pleased with this investment, and that of course is going to be gold. And I actually picked up gold. I've been buying gold actually for a very long time, but in more seriousness, I started buying in 2023. That was back in May. So you can see the alert. Bought 10 grams of gold, 24 karat at 1960 per ounce. Super long-term diversification. Then picked up more gold in December 2023. I was back in India at the time, and again picked it up at around $2,146 an ounce. That was after I witnessed such an incredible amount of demand for this asset class because of all the weddings, the wedding season over in India, and also mentioned 1.5 million weddings in India in the next 1 month. It's a madhouse here in Delhi. Demand for gold is through the roof because it's the primary commodity used in making jewelry. And then February 2024 picked up more gold and also silver, another 11 grams of 24 karat, and then another 10 grams 24 karat in April of 2024. So almost all of my purchases were happened in and around this time. And like I said, I've been buying gold for a very long time. My family's been buying it for a very long time because I come from India. And this right here has been the gains from those purchases. I mean, it's already up over to 38%. The arrows are the exact alerts that I sent out. And gold right now sitting well over $2,506 per ounce. And 1 ton, which is 1,000 kilograms, is I believe over 35,600 ounces, right? So again, these are just different units that you can measure in. But this right here is an asset class, which in my opinion, has a ton of potential, and I feel like it's only getting started after having over 10 years worth of consolidation. And I'll go over what are some of the reasons why we're starting to see this bull market emerge in this particular commodity. I'll break down all those reasons, but as you can see that it was for the longest time trading at the same level as it has from back in 2011. So if you come over to 2011, you'll notice that we were pretty much trading at the same level for over 12 years, right? So at around $1,960, $2,000 per ounce, but I wasn't buying back in 2011. I actually started buying the last couple of years, and now we're starting to see it break out over a brand new all-time high, already up over 35% from my initial purchases. So we're going to break this down. As always, make sure that you drop a like, subscribe to the channel, share this with other people, investors that can benefit from this type of analysis. And like I said, I've already been buying it and I'm going to continue to invest more into this asset class. Already have, I think, close to 60-70 grams or close to maybe 100 grams of gold. And my plan is to get up to 1 ton. I'm just kidding. 1 ton would be 1,000 kilograms, right? So 1 ton is a lot of gold, but the plan would be to at least buy a pretty significant chunk over the next few months to a few years here. So coming over to the overall supply, right? So how much do we have and how much do we have left to mine? So in the most recent estimate from the Gold Council, you'll notice, and that was the most recent in 2019, that put a figure of 197,576 tons of gold. And again, that's how much there's been mined, right? So 197,000 that's already been mined in the world. And as we already know that it's almost impossible to destroy, but it can be reprocessed, reshaped, melted down, alloyed with other harder metals. And therefore, the total supply of gold available on this planet will remain virtually unchanged for the foreseeable future. Because I believe right now, as it stands, there's over 54,000 tons of gold underneath the surface of the earth, so below the ground, and 190,000 tons has already been mined and processed, and it's been developed in jewelry, officially owned gold. We got privately owned gold, we got other gold, again, investment. In terms of investment, we got gold coins, we've got gold bars, physical gold, and then, of course, jewelry products as well. So that's over 197,000 tons as of 2019, and still 54,000 tons of gold that remains underground. Now, this gold is actually becoming more and more difficult to mine because of the increase in cost and the decrease in the success rate. So if you come over to this is a study from S&P Global Intelligence. It's a little bit more outdated from 2018, but it essentially shows us that gold discovery rates continue to decline. So this right here is the overall chart that shows us that gold discovery is actually trending lower. So although global gold budgets have fallen from a 10-year peak in 2012, spending on finding new gold ounces remain at historical high levels, with $54.3 billion allocated to gold exploration over the past decade, almost 60% higher than the $32.2 billion spent over the preceding 18-year period. However, the increase in dollars spent has not yet resulted in more new discoveries or discovered ounces compared with the previous period. Only 215.5 million ounces of gold has been defined in 41 discoveries over the most recent 10 years, compared to the 1,726 million ounces in 2020 in 222 discoveries in the preceding 18 years. So the success rate of finding new gold is going down significantly. Despite having better technology, it's becoming more and more rare to find gold here. So there is definitely that concept of finite supply, limited supply to begin with. Now, one thing I want to mention is that I want to be very clear. Now, gold is not something that I am expecting to make big returns. Although if that happens, it's going to be the cherry on top. The main reason for my investment in gold is some significant store of value in times of levels of high inflation and even crises and economic uncertainty. So those are some of the reasons why I do believe gold definitely has a significant bull thesis, as well as its ability to remain uncorrelated with the equity markets. So if you come back to this spreadsheet, this is, I shared this correlation spreadsheet not too long ago. And what we do here is that we essentially try to understand the performance of one asset class compared to the other, right? So we're trying to understand correlations between equities. So we got SPY QQQ, we got the bond market, which is fixed income. It's a whole different asset class. We got TLT for that. We got VNQ, which is real estate. We got the dollar index. We got the 10-year treasuries. We got Bitcoin, and we've got gold. Now you'll notice that Bitcoin is probably one of the, how many assets do we have here? So we've got about 7 assets because SPY QQQ are equities, bonds, gold, real estate, dollar, treasuries, and then we've got Bitcoin. So we got 6-7 assets here, and Bitcoin and gold are the 2 asset classes that are very, very uncorrelated with all the other ones. With other ones, as for example, you'll notice SPY with TLT, we've got a negative correlation of negative 0.27. With TLT and of course their treasury yields, we've got negative 0.8 correlation, as it should be. As prices go up, yields go down, and vice versa. If you take a look at real estate, for example, VNQ, very much highly correlated in the positive direction with equities. And then if you take a look at VNQ with, for example, the dollar index, negatively correlated. But if you take a look at the gold column, right, it is practically 0. So correlation coefficient ranges anywhere from -1 to +1. And the closer it is to -1, the more negatively correlated that asset's going to be. And the more closer it is to +1, the more positively correlated that asset's going to be. But the closer it is to 0, that means more and more uncorrelation, meaning that it's not going to fluctuate or move based on what the other asset is doing. And that's exactly what we want if we are looking to diversify, right? So if you're looking to protect our wealth and also have some sort of store of our wealth, and again, some level of diversification. So gold kind of fits that category really well because it is very uncorrelated. As you can see, that we're going back for this analysis as far as 1999. So really just going back 25 years. And gold has historically not really seen a lot of correlation with equity markets, right? 0.05, 0.04. So let me see if I have a chart for, there we go. So SPY with gold, we've got a nice circle, meaning that there's not a lot of correlation with equity with respect to gold. So it is a way to diversify away from equities market volatility, and also for us to have that uncorrelation. And again, in times of crises or war or levels of high inflation, gold can be a good store of value, in my personal opinion. And one more thing I want to point out is that gold actually goes through these cycles where it takes off in this bull market, right? So if you notice, nobody talks about this. In 2000, and that was actually one of my reasons why I started investing in gold in the first place. In 2000s, as we were seeing the dot-com bubble burst, gold actually ended up outperforming both the S&P 500 and the NASDAQ. So what we have here is the chart for gold versus SPY. So you got gold divided by SPY. So every time this chart goes up, as it is right now, gold outperforms. Every time it is going down, gold is underperforming. So what we witnessed from 1999, pretty much 2000s, all the way to 2011. So this right here was the peak. We saw significant levels of outperformance from gold against the S&P 500. And then from 2011, that's really when this bull market emerged, we have seen gold underperform significantly against the S&P 500, because as I mentioned earlier, gold has really just gone sideways in the last 12 years. So if you compare where gold was in 2011, the peak of over $1,900 an ounce, compared to where we were quite literally up until August of 2023, literally no change, right? At some point, gold was down over 43% from its all-time highs, down to as low as $1,000 per ounce, and of course quickly and steadily recovered, and it's now up over 144% from its 2016 low. So for 10 years, 11 years, it didn't really do anything. Prior to that, you can see this entire rally where it basically started in 2000s and went from about $250 an ounce to well over $1,900 an ounce. That was over a 668% rally in those 11 years, as opposed to S&P 500. So if you come over to SPX, from 1999 all the way to 2011, if you come back a little bit, so that right there is going to be 1999. So actually this is going to be this right here, 1999 to 2011. We're going to be talking about all the way over here. So 2011, the markets were basically up 1%. So no changes whatsoever. So we did see a lot of underperformance relative to gold here. Now, I'm not saying that this is actually going to create another sort of outperformance here where we're consolidating sideways. We're kind of going through that same process of underperformance for 10, 11 years, and the next decade belongs to gold. That's not the reason why I'm actually buying this in the first place. Like I said, my reasoning is a store of value, diversification, and having that uncorrelated asset, which is not going to be fluctuating based on what the equity markets are doing, based on, again, the monetary policy or inflation or interest rates and all that stuff. So for me, this is more of a diversification and asset protection standpoint, but if it ends up outperforming, all the more better, right? All the more better, because that is going to give me that capital appreciation that we don't so desperately need as investors. And there's other reasons that I also want to address and highlight in this video. And, if you take a look how much gold has been found in the world. So it was estimated in 2017 that 190,000 tons gold have been mined throughout history. And with additional 7,000 being mined in the following year, so 197,000 up until 2019, and rough estimates put a figure of 54,000 tons of gold reserves still remaining below the ground. If correct, these figures give a total of just about 244,000 tons of gold that will ever be available for use on Earth. Some other things I want to mention is that I always buy 24 karat gold because it's a 99.9% purity, and that is literally just gold, right? So that's pure gold. Anything else in carats is going to be a mixture of other metals and commodities. So like there's going to be some silver in there, or copper, or palladium, or platinum, whatever it is. Like it's going to be a mixture of other things. Like, so for example, 22 karat gold, 18 karat, 14 karat. I've got a couple different watches that I have, so they actually use 18 karat gold because you cannot mold or you cannot make jewelry with certain types of gold here, so you have to mix other metals in there, because fine jewelry kind of can only be molded and made using 18 karat gold. But pure gold, I do have 24 karat, and then I've got a lot of 18 karat gold also with me, so that's about 75% pure gold. But of course you can actually make and extrapolate full 24 karat gold if you were to only just use gold and remove everything else, silver, copper, everything that's in the jewelry. So that is kind of like the purity chart. And I also want to go over some of the demand metrics for gold. Now that we've figured out, okay, there's limited supply, what is actually going to be the demand factors that's going to lead to potentially higher prices for this commodity? So since we know the supplies are finite for gold, and only 20% of the Earth's supply remains untapped, according to World Gold Council figures, mines produce about 25 to 3,000 tons a year. This means that without some significant new discovery, gold supply from mining will begin to run out in the next 20 years. So gold supply will become totally reliant on recycling, melting down old or scrap gold and turning it into more useful items. And this right here is where the demand comes from. So demand for gold comes from several factors, including jewelry. We got central banks. So central banks actually had a very, very high record quarter for demand in the second quarter, which was reported by the World Council. And we got investment gold bars and gold coins and manufacturing. It is this diversity in demand that helps the gold to hold its value. And jewelry, 48% of demand comes from jewelry. And guess where are the two countries that demand is coming from the most? And that is China and India. There is no doubt about it that India is going to be at the top of the list. And I wouldn't be surprised if India actually takes over China in the coming years because of so much demand coming in from that particular country. And not only that, as the population grows, and of course India took over China as the most populous country in the world, the demand for gold is going to continue to skyrocket, in my opinion, for gold. So 25% of the demand, they were accounted for back in 1990s, China and India, and now that has more than doubled to over 50%. And this surge in demand for gold stems from the significant economic growth in the two countries that have experienced in the past decade. This has given consumers more opportunities to buy the jewelry ingrained in the two countries' cultures and explore private investments as well. Central banks are also buying, so it's not just India and China as countries that are buying. Central banks are also been interested. So according to World Gold Council, central banks added over 1,000 tons of gold in 2023. So they're not stupid people. These are smart people that are actually buying gold as well. The second highest annual acquisition in history, right? After seeing a record 1,000 tons in 2022. So combined, we're looking at over 2,100 tons of gold picked up by central banks over how many central banks are there? Over 70, I think over 100 central banks in the last 2 years. And a total of 70 central banks participated in the 2024 Central Bank Gold Reserve Survey, which took place in February 19th and April 30th. And of those, 29% said they plan to increase their gold reserves in the upcoming year as well. And second quarter gold demand hits record highs, supporting rising prices. And this was very, very recent as of July 30th, 2024. So this is the record high for demand for gold. So here are some of the bullish theses for gold, as I mentioned earlier. So high levels of inflation, right? So globally, not just in the US, but globally, if there's high levels of inflation, fiat currency starts to devalue quite rapidly. Gold is where that steps in, and that tends to be the global monetary system, which is, again, backed by actual physical gold, right? So if fiat currencies start to devalue because of high levels of inflation globally, that's a pretty bold thesis for gold. And that's why central banks around the world are actually buying to prop up their balance sheets with something more tangible and more physical. In terms of war or crisis, we already know there's a lot of geopolitical tensions between Russia, Ukraine, Iran, Israel, India, Pakistan. We got China, and Taiwan. So, again, the NATO, and again, there's a lot of different things that are happening all over the world. So this is a safe haven asset, right? That's actually one of the reasons why I mentioned that it is a store of value, right? At the end of the day, if things were to go south, this is an investment that is going to, in my opinion, again, none of this is financial advice, so please make sure that you do your research and analysis on this, but it is one of the asset classes that, in my opinion, is going to hold its value over time and perform, if not great or against the S&P 500, if maybe not it outperforms, but it's going to hold its value fairly well. So it's a good way to diversify a little bit. It's an uncorrelated asset class and finite in supply. Factors affecting demand: two countries with the highest demand are the most populous, and also the population is growing. It's not like the most demand is coming from Japan, which is declining in population. India is going to, in my opinion, become the biggest source of that demand as a single country, and the population is growing, and China's population is also growing here. Those are the two biggest demanders, and of course, not to mention central banks, because of some cultural demands as well. So that's where we are. And finally, one more thing that I want to mention here is the Google Trends. I was actually looking at buy gold Google Trend. So let me just go over that here. Let's take a look if I can figure this out very quickly. So, I went over to Google Trends just to try to understand what is the overall trend for gold since 2004. So what I typed in here is buy gold. How many people are actually typing this or mentioning this in their search? And we're going to come over to worldwide, and we're going to go to 2004 to present. And what I actually witnessed was quite interesting, that every time gold peaked to 100, if you come over to July 2011, that was quite literally the peak for gold, and that was in August of 2011. That was a peak of 1900. Then it didn't really peak all that much, and then again, if you come over to April of 2020 or August of 2020, that was another peak in gold, and now it's starting to once again trend a little bit higher. So one more thing I want to point out is what used to be a little bit of a floor for this search term is now becoming what used to be a bit of a ceiling is now actually turning into a bit of a floor for gold. So I wouldn't be surprised if we normalize above 75 in terms of that search term. And again, this is just a little bit of a sentimental or overall perception indicator that how many people are actually searching for gold. But in my opinion, this is an asset class where I don't mind adding a little bit to my portfolio, and adding, of course, in some larger quantities over time as well. So hope you all enjoyed this video. Let me know your thoughts down in the comment section below. I think GLD is one of the ETFs, which is the Spider Gold Trust, which is also hitting new all-time highs. You can see that $231.99, up over 2.2% on Friday. So this is an ETF that also pays out, actually no dividend, but very, very significant amount of assets under management, and hitting a brand new all-time high. Of course, didn't really do anything since 2011, so it was basically trading sideways. So you can see how well correlated it is with the gold price is. But again, if you take a look at where it is from October of 23, it's up over 38, almost 40%. So let me know your thoughts down in the comment section below. And what do you think about gold as an investment? I would love to know from you guys. As always, make sure that you drop a like, subscribe to the channel. Happy investing, and I'll see you all in the next video.